What is India's only agri exchange actually worth? Imagine this. Every time a trader in Rajasthan wants to know the fair price of jowar, or a processor in Gujarat is trying to hedge his chana exposure, or a farmer's collective in MP wants to lock in a price before the harvest, there is one exchange sitting quietly at the center of all of that. And that exchange is not BSE, it's not NSE, it's NCDEX. NCDEX, the National Commodity and Derivatives Exchange, was set up in 2003 with one specific job: to bring price discovery and risk management to India's agricultural markets, and for over 2 decades, that's exactly what it has done. It trades everything from jowar and chana to jeera and turmeric. And here's the thing, the prices it generates aren't just numbers on screen. They're actual benchmark that mandis, traders, and agribusinesses across the country reference. That's real economic power. Now, what makes NCDEX genuinely unique is that it holds the only SEBI-granted license for an agricultural commodity derivatives exchange in India. You cannot replicate that. No new player can walk in and compete. That regulatory moat is the foundation of the entire investment case. But here's where it gets complicated. The exchange has been going through a rough patch. SEBI suspended several of its key contracts a few years ago, and that hit volumes hard. Without volumes, an exchange doesn't make money. And NCDEX has been in that difficult spot for a while now, where its operating costs are higher than what it earns from transaction fees. It's been surviving largely on investment income, not its own balance sheet. So why are people still interested in an unlisted share? Two reasons. First, the balance sheet. NCDEX is a completely debt-free, asset-light, and sitting on a strong corpus of investments. It's not burning cash recklessly. Second, the exchange recently got SEBI approval to launch an equity and equity derivative segment. That is a massive pivot. If it executes well, it opens up an entirely new revenue stream that has nothing to do with agricultural volumes. We used a revenue-based approach to value the exchange because given where earnings are right now, that's the most suitable anchor. And what we get is an intrinsic value of around 363 rupees per share against a current unlisted market price of roughly 349 rupees. That's about a 4% upside on paper. But honestly, the 4% is not the point. The point is what happens if volumes come back. Exchange businesses have extraordinary operating leverage. Once you cover your fixed cost, almost every additional rupee of transaction revenue flows straight to the bottom line. So a recovery in ADTV, even a partial one, could change the financial picture dramatically and quickly. NCDEX is not a momentum stock, it's not a quick flip trade, it's a structural bet on the formalization of Indian agricultural, on FPO scaling up, on a policy normalization, and on management team that is actively trying to reinvent the exchange for the next decade. Meanwhile, for more such information, you stay tuned and keep watching Sheska.